John, you've been looking through the numbers. Initially, headline, what jumps out at you?
Well, if we were going to look at this the way we look at earnings reports, you might say that Twitter's sales fell short of what people expected. It's a little more difficult in the case of Twitter because they had never shared any financials with us, so you had nothing to use as greater context. But there were some estimates that this was a company that was going to generate closer to $600 million in revenue this year. For example, eMarketer was estimating that in 2013, this company would generate $582.8 million, which would represent more than 100% growth based on their estimates. So those were the estimates from eMarketer. What we were told by Twitter today is that in the first basically in the first half of the year, as you highlighted, the company generated roughly $253 million. So you crunch the numbers on that and you say maybe the sales revenue is a little shy. There's more of the year to come for sure. They did also highlight that the bulk of their revenue does come from advertising, which is not a surprise, something in the neighborhood of 87%. Of those 215 million monthly active users, most are generating revenue for Twitter through the ads that you see or engage with. And they highlighted those three areas in particular on advertising, all that fall into this promoted category. So promoted tweets and promoted trends and promoted accounts. Promoted tweets are a really interesting, obvious one to understand if you use Twitter, because these tweets come into your Twitter feed and you see them there and they're very easy to engage with. There are other parts of the business, though, that promoted business, like promoted trends, where you're basically taking over the homepage, kind of like with Yahoo. We'll continue to go through the filing to sort of look at the growth for other parts of the business, like how much they can generate, maybe even longer term, from licensing the data stream that is Twitter. But certainly here's a company that is generating a lot of year-over-year revenue, maybe not as much as what some would have thought, but additionally is spending a lot to grow the business.
Now, John, we're getting more numbers as you speak. I want to bring in Corey Johnson, our editor-at-large. Corey, you've been combing through the numbers as well. I want to get to the question of risk factors. Twitter has warned that its revenue growth may slow down. What are you seeing as the major risk factors that they've pointed out here?
I've actually been going through some of the user numbers, so I haven't got to the risk factor section yet, and I promise that I will. But the user numbers are pretty interesting. So among the interesting user numbers, right, so John was talking about 218 million users total, but most of its users are actually overseas, only 49 million in the U.S., 169 million internationally. But as I start to punch these numbers into the model I'm building here, what we see is that the user growth is actually slowing precipitously. I think that users should be compared not year over year, but sequentially. And the sequential user growth over the course of the last 3 years has gone from as high as a 33% sequential user growth to 18% a year ago, or I should say a year and a half ago, to 11% a year ago, now to 6% sequential revenue growth of users. So the user growth worldwide is dramatically slowing in this business. So that's not to say it can't reaccelerate. We saw that happen with Facebook. But in the case of Twitter, the user growth numbers are slowing down, and that, of course, is a risk when you're trying to get a growth stock valuation. If you're not growing users, you're going to have to grow the monetization of those users even faster.